Welcome to My Finance Teacher, and let's have a look at gold. Starting with the US dollar, gold often does move opposite to the movement in the US dollar, but it doesn't always have to do that. For example, between 6th and 18th of April, both gold and dollar have generally been moving upwards. But I do like to look at the dollar as just yet another potential clue to where gold might go, although there are of course no certainties and nobody knows the future. The intermediate cycle in dollar has been going on for 101 days. The intermediate cycle started in mid-January. Usually these intermediate cycles last for around half a year, perhaps in dollar, although sometimes they can be quite stretched, as the previous intermediate cycle lasted between late May and mid-January for 234 days. So perhaps the average is slightly above half a year. I'll have to recheck that. I haven't recalculated the averages. So with the intermediate cycle at 101 days, and as we do expect FOMC meeting with a hiking of the rates in early May, by then the intermediate cycle will be around 111 days. That's more than half of the average duration of, say, perhaps just over half a year. So that might be a good time for the intermediate cycle top and for the US dollar to move sideways to down for the remainder of the intermediate cycle. But in the shorter term, the daily cycle is now 26 days long. Usually on average these cycles last for just over a couple of months. So again, with the same expectation of that early May FOMC meeting, perhaps dollar has a chance to poke another once or twice above the Bollinger Bands before the daily cycle tops as well. So to visualize, for the short-term daily cycle, a bit of a top into that FOMC meeting in early May before the drop into the short-term daily cycle low, a bit of a bounce into one more perhaps daily cycle low of the ongoing intermediate cycle before dollar cools down for a few weeks. What this implies is perhaps a bit of a weakness in gold over the shorter term, again into that FOMC meeting before another rally can actually take place, and perhaps this rally is going to be a rally into the new intermediate cycle rather than a short-term daily cycle, as dollar is going to generally move sideways to down into its intermediate cycle low. So looking at gold, as we were expecting, gold is relatively weak into that FOMC meeting. The daily cycle is now 27 days long. Again, usually these daily cycles on gold last for just under a couple of months, as far as I remember history, although perhaps I might recheck the averages over the last couple of years. So into this FOMC meeting, the daily cycle would be around 36 days long, and following a bit of a longer cycle lasting for 60 days, perhaps this cycle might turn out to be a bit of a short one before we see a bit of a bounce. Whether that bounce is going to be only a daily cycle rally following a drop into the intermediate cycle low still, of course, remains to be seen, but there is a pretty good chance that it's going to be the intermediate cycle low that we're going to experience over the next couple of weeks, which means the following rally could be quite substantial into the new intermediate cycle. And the reason for that is that the ongoing intermediate cycle in gold has been going on for 44 plus 60 plus 27, that's 127 days. If the daily cycle continues for another couple of weeks, that gives us an intermediate cycle lasting for 136 days, 140 days. That's a little bit less than usual. Usually the intermediate cycles in gold last for around half a year. So that means that there's probably a relatively equal chance of either short-term bounce in gold following the decline into the intermediate cycle closer to an average duration of around 180 days, or there is still a relatively good chance, perhaps a 40% chance, that we're going to see a stronger rally into the new intermediate cycle. In either case, a bit of a buying opportunity is perhaps coming up over the next couple of weeks. Next, let's have a look at gold optimism index, which has dropped over the last several days from around 67 down to 59 right now. As you see, more recent history since the pandemic drops shows that the intermediate cycles in gold come with this optimism index somewhere just below the level of 50. Although more distant history shows the intermediate cycles in gold with this optimism index closer to 30. So if the more recent history is relatively more important to pay attention to, then perhaps again another few weeks of relatively soft gold prices for this optimism index to come down to just below 50, and that's when you might find a relatively good buying opportunity. Looking at the commitment of traders report on gold, let's have a look at this red line, which is the commercials position. The green line is the position of the speculators. Usually the commercials are called smart money, although of course nobody does know the future, and even the smart money does lose money sometimes. But for example, just before this pandemic drop, we see the short positions in smart money declining. Same thing happened over here in early 21, intermediate cycle low in gold. The negative positions, the short positions in smart money is declining, as it probably expects gold to recover. And opposite to that, as in late 2021, for example, as the gold is peaking into the intermediate cycle top, the short positions, the negative positions of smart money are actually rising. Recently, so far, we haven't really seen any significant drop in the short positions of smart money, so perhaps into that FOMC meeting over the next couple of weeks, if we see this red line rising a little bit, the short side declining, that would be another positive sign for an intermediate cycle rally in gold. On the other hand, if this red line doesn't really move much higher over the next couple of weeks, then perhaps the rally in gold might only turn out to be a short-term daily cycle rally. And lastly, let's have a look at seasonality in gold, although I much prefer looking at cycles rather than seasonality. And this is the seasonality chart for 2015 to 2022, since the beginning of the ongoing bull market in gold. And we see that seasonality doesn't actually contradict what we expect over here. Usually gold does drop down into early May. And what follows is usually a relatively modest rally in gold into mid-summer. And near the end of summer is when we usually see relatively stronger gains in gold, as well as at the end of the year, often into that Chinese New Year in January or February. So in summary, perhaps a bit of patience in gold, but of course nobody does know the future, so I'm interested in your opinion. Leave a comment down below, hit that like button, subscribe to the channel, and have a nice day. Bye-bye.